Okay, a very good morning. Today is Friday, the 26th of November, and time is now 8:27 a.m. GMT. So, risk sentiment is sharply lower in early trading, taking a lead from Asia, where Japan's Nikkei 225 tumbled 2.5%, and South Korea's Kospi ended lower by 1.5%, and Australia's ASX 200 was down by nearly 2%. Now, as for European cash equity indexes, there's a sea of red in the market right now. London's FTSE 100 is down by 3.4%. Germany's DAX is down 3.4%. France's CAC 40 is down by 4.3%. And the Euro Stoxx 50 is also down by 4%. This, according to my research, is largely based on concerns of a new COVID variant that will prompt fresh restrictions and clearly hinder the European economic recovery. Latest news I saw was Germany declaring South Africa a country with a COVID variant of concern. It's a similar picture for US equity index futures, all heavily lower across the board this morning. As you would expect, risk-sensitive currencies are also taking a hit. The Australian dollar against the New Zealand dollar is down 1%. The New Zealand dollar against the US dollar is also down by 8%. Now, the New Zealand dollar against the Japanese yen is down by more than 2% right now. And the Aussie dollar against the Japanese yen is down 2.4%. It's crazy moves this morning. Absolutely crazy. Dollar yen is currently lower by more than 1% as traders bid the safe haven yen and sell the buck. We're also seeing spot gold rally currently up by more than 1%. Now, in terms of the US dollar index, we are lower by 0.2%. This is a geometric weighted average, a dollar value against a basket of 6 foreign currencies, with the euro dollar controlling the largest weight at around 57.6%, I believe. So to the charts. As you can see, we have the euro dollar first up on the menu. The main focus, of course, for this morning will be on the higher time frames, given the volatility we are seeing. So as you can see, euro dollar is currently shaking hands with the Fibonacci support on the weekly time frame between 26.37, excuse me, guys, 12.37, 12.81. Now, as I've said in previous technical talks, this is a combination of an alternate AB equals CD bullish pattern, which is the 1.618% Fibonacci projection, as well as a 61.8% Fibonacci retracement, as I said, at 12.81. Now, should we rally from this point? I will be expecting resistance to form around the 1473 1583 region. Now, in terms of the daily time frame, we have seen Quasimodo support at 12.13 recently come to life, which could obviously push the markets higher. And I'll be looking at the trend line resistance, which is taken from the high 22.54. So we do have some room to run higher on the bigger picture. Now, do take into consideration this trend line resistance intersects with the weekly resistance area at 1473, 1583. Now over to the Aussie dollar. As I noted, the Aussie dollar is really suffering this morning. As you can see, we are heavily lower on both the weekly and daily time frames right now. So on the weekly time frame, prime support at 69, 68, 72, 42 is under pressure. Should we break below this area, we may eventually even see support come in at 66.73. So do be aware of this. Now, we also see a possible an A, B, C, D formation in range, possibly in range, should we break lower. Now, in terms of the daily time frame, we are testing Fibonacci support. Now, let me just enlarge that chart so we can see it fully. Now, this comes in between the 38.2% Fibonacci retracement at 70.57. Now, this is taken from pandemic lows of 55.06 and extended to the 25th of February high at give me a minute, at 80.07. Now, should and that's also combined with a 1.618% Fibonacci projection at 71.26. Now, this is an area I am watching closely, as we did have a nice bounce from this zone recently, which also formed an AB equals CD into around the 75.51 area. Should we break this area, do keep an eye on support at 70.21. This is the daily time frame, guys. Also, in terms of the relative strength index, we are now currently in oversold territory, and we have bounced below support at 28.09. Now, this is a support that's held twice since mid-June. So breaking here could lead us to the lower levels around this area here at 22.50-ish. Now, on to the dollar yen. As I said, the dollar yen is considerably lower this morning. We are on track to form, this is the weekly time frame here, guys. We are on track to form another shooting star or gravestone doji, as many candlestick enthusiasts will recognize, as we fail to find acceptance above the resistance at 114.38, and also the upper edge of the bullish flag pattern that comes in, that's drawn from the 114.70 high. Should we extend lower from here? Keep an eye on support at 112.16. This is a longer term view, guys, so do keep that in mind. Now, as you can see, look at the size of this candle this morning. It's just incredible. So as you can see, we are heavily lower on the dollar yen. Should we continue in this manner going into US markets later on? Do keep an eye on this supply turn demand at 112.66, 112.07. As you can see, we did fail to test this back in early November. So this could be an area we see tested. Failing that, do keep an eye on the decision point at 111.18, 111.79. Now, finally, onto the pound dollar. In most of my technical talks, I have highlighted the double top pattern that's clearly in play on the weekly time frame, and the break of the neckline that was seen in mid-August, and also on top of this, the break of the supply turn demand area at 36.29, 34.56. Now, with this double top pattern and confirmed double top pattern potentially dragging us all the way down to 131-ish, do take note of the bigger picture trend. So as you can see, if I just zoom out, we are in a considerable downtrend right now. And this is, you can see this more clearer on the monthly time frame. As you can see, we are in a clear downtrend, and this could simply be another pullback before we continue lower. This is very long term, so do keep that in mind. But having the confluence of a major longer term trend plus a double top pattern on the weekly time frame that's been confirmed, we are potentially heading for the 131-ish region on the according to the double top patterns rules of engagement. Now, finally, on to the gold market, spot gold. As I said, gold is higher this morning by, as you can see, by 1%. Now, for those who watched recent technical talks, you will note that I highlighted the Gartley pattern between 1878 and 1865. You just have to admire the Gartley, the harmonic formations when they hold price. It's almost magical. So look, we have seen a considerable drop from this area, and we have tested the 38.2% region at, I think it's around 1800 the figure. Now, this is, in terms of traditional take profit targets used by many, this is the first take profit target. Now, the 38.2% is taken from the legs of A to D, so the highest point within that formed within the PRZ of the Gartley pattern. So as you can see, I've drawn a Fibonacci retracement from A to the peak of the most recent move. So 38.2% has been hit already, and this will see a lot of traders either take partial profits and reduce risk to break even wherever they entered around here. However, many traders will also be looking at the 61.8% Fibonacci ratio, again, taken from the legs A to the peak. And that comes in around 1753. And this is usually looked at either as a final take profit target or a place to begin initiating a trailing stop. So do keep that in mind. Okay, that's a wrap from my side. Any questions or comments, as usual, please send an email to marketsanalyst@fpmarkets.com. With that, have a wonderful weekend, and I'll catch up with you again on Monday. Thank you.